China's evolving energy strategy has become a linchpin in the complex matrix of global oil trade. The nation's recent pivot away from US crude oil highlights a seismic shift with far-reaching implications. According to data from Kepler, China's imports of US crude have plunged nearly 46%, dropping from 115.6 million barrels last year to 81.9 million barrels in 2024. This move has demoted the US from China's second largest crude supplier to its sixth. Such a dramatic realignment isn't just a numbers game. It signals a profound thinking of priorities, reshaping global energy markets in the process. Before diving into the details, if you are finding this analysis valuable, don't forget to hit the like button and share it with your network. Your support helps us bring more insights like this to you. China, as the world's largest oil importer and second largest consumer, has long relied on a diverse network of suppliers to meet its energy demands. However, recent figures indicate a 7.2% year-on-year drop in overall crude oil imports. A combination of factors including intermittent COVID-19 lockdowns, high domestic inventories, and planned refinery maintenance has contributed to this dip. Despite the slowdown, China's strategic pivot reveals a calculated shift in procurement tactics. The emphasis isn't just on volume, but on securing competitive terms that bolster energy security. Official customs data show a deliberate move away from certain Western producers, underscoring a multifaceted approach to acquiring oil. China has increased its imports from nations like Russia, Iran, and Venezuela, with their share of seaborne crude imports rising from 24% to 26%. While this percentage increase might seem modest, it represents a substantial volume considering China's daily import base of over 10 million barrels. Russian crude offered at steep discounts due to Western sanctions has become particularly attractive. Meanwhile, Iranian and Venezuelan oil, despite being under US sanctions, continue flowing to China through creative methods like turning off transponders and conducting ship-to-ship transfers. These discounted supplies not only plug the gap left by declining Western imports, but also deepen China's engagement with politically isolated exporters. If this topic intrigues you, drop a comment below with your thoughts. We'd love to hear how you see these trends shaping the future of global energy dynamics. For China's refiners, sourcing discounted crude translates to higher profit margins. These savings enable Beijing to either subsidize domestic fuel prices or ramp up refined product exports, especially across Asia. Furthermore, diversifying suppliers reduces reliance on any single producer or region, enhancing energy security and mitigating the risk of geopolitical disruptions. China's pivot also advances its broader geopolitical goals. By engaging with nations like Russia, Iran, and Venezuela, China not only counters Western sanctions, but also asserts itself as a global player willing to challenge US-led policies. This strategy boosts Beijing's diplomatic leverage while securing cheaper energy supplies, creating a win-win scenario for the nation. The flow of sanctioned crude into China often involves sophisticated routing techniques. Companies like Kepler rely on satellite imagery, automatic identification system data, and port fillings to monitor vessel movements. Tactics such as disabling AIS transponders and conducting ship-to-ship transfers, particularly near Malaysian waters, obscure the true origin of these shipments. Even a minor 2% shift in China's import origins can have outsized effects, redirecting billions of dollars in trade and reshuffling global shipping lanes. Traditional suppliers like Saudi Arabia, Angola, and Brazil feel the pinch, offering restoring to price cuts to maintain market share. This shift underscores China's growing influence in global trade dynamics. China's evolving import strategy calls into question the effectiveness of Western sanctions. By exploiting loopholes, Beijing continues to access cheap oil, influencing global benchmarks and market sentiments. This dynamic complicates efforts by sanctioned nations' competitors to maintain price stability. China's appetite for discounted crude forces established producers to rethink their pricing strategies. For Russia, a key OPEC Plus member, these discounted sales to China sometimes undermine the cartel's collective efforts to sustain higher price levels. This creates tension within the alliance and prompts adjustments to supply routes and contract terms. China's rapid adoption of electric vehicles and the government's push for electrification in transportation and industry are poised to reduce long-term oil import needs. Additionally, the growing role of cleaner energy sources like liquefied natural gas further displaces traditional crude. Beijing Energy Realignment aligns with its broader strategy to reduce dependency on Western imports. Strengthening ties with Russia and Iran reflects this shift, further reshaping global energy markets and trade patterns. China's reduced reliance on U.S. crude has ripple effects for the American economy. An oversupply in the domestic market could push prices lower, squeezing revenues for U.S. oil producers and curbing sector investments and job creations. Additionally, a sustained drop in exports may widen the U.S. trade deficit, affecting broader economic indicators. The ongoing U.S.-China trade war has accelerated Beijing's diversification of energy imports. This trend highlights the intricate interplay between economic policies and international relations, adding another layer of complexity to bilateral ties. China's energy strategy aligns with BRICS initiatives to promote a multipolar economic order. By accessing discounted crude and bypassing the petrodollar system, China weakens U.S. economic influence while fostering alternative trade frameworks. This shift also deepens cooperation among BRICS nations, emphasizing the bloc's collective push for a more balanced global economic system. China's evolving oil import strategy is more than just a shift in trade patterns. It's a calculated move to secure energy on favorable terms while reshaping global dynamics. By reducing reliance on U.S. crude and turning to discounted supplies from sanctioned nations, China bolsters its energy security and economic resilience. These changes challenge the effectiveness of Western sanctions, disrupt traditional trade routes, and underscore Beijing's growing clout in international markets. As these developments unfold, their impact on global energy markets and geopolitical relations will undoubtedly be profound. If you found this analysis insightful, please give this video a like, subscribe to our channel, and ring the notification bell so you never miss an update. Thank you for watching.